50,000 on the Dow is not really that significant when you consider that gold is almost 50,000. In fact, gold settled the week just below, I think, 4,957. So it's close enough to 5,000. But if you divide the price of gold by the Dow, that's 10. The Dow is only worth 10 ounces of gold. Buy your gold and silver over the weekend. You know, we've had this big correction. We typically have rallies on Mondays. We've had a lot of noise recently, but I think we're going to get back to the same trajectory that we were on before, where we get strength coming out of Asia, because that's where the real buying was or has been, and I expect that to continue.
While the Dow Jones Industrial Average hitting 50,000 grabs headlines, this nominal milestone is deceptive when measured against the actual currency of gold. With gold settling just under $4,957, the real value of the Dow has compressed to approximately 10 ounces of gold, underscoring that stock market gains are primarily a function of dollar devaluation rather than economic growth. This ratio serves as a critical reality check, indicating that despite the noise of recent volatility, the purchasing power of financial assets is stagnant relative to hard money. Investors are urged to use the weekend dip as an accumulation window before the established trend resumes. PeterSchiff, chief economist at Euro-Pacific Asset Management, emphasizes that the recent market correction is a temporary distraction from the primary trajectory. He predicts a swift return to strength, potentially starting with a Monday rally, driven by persistent aggressive buying from Asian markets. Schiff argues that the fundamental drivers remain intact, and that the real buying from the East will continue to push precious metals higher, making current prices a strategic entry point. Now we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I think the big financial story this week is going to be the Dow Jones Industrial Average closing above 50,000 for the first time ever. You know, Donald Trump has now promised to double that to 100,000. But 50,000 on the Dow is not really that significant when you consider that gold is almost 50,000. In fact, gold settled the week just below, I think, 4,957. So it's close enough to 5,000. But if you divide the price of gold by the Dow, that's 10. The Dow is only worth 10 ounces of gold. Back in 1999, it was worth more than 40 ounces of gold. So a 75% decline in, 26 years, 27 years? That is a major bear market. The reason the Dow appears to be going up is because the value of our money, US dollars, are going down. So you need more dollars to buy the Dow, and you need even more dollars to buy an ounce of gold. This is what the media doesn't want to pay attention to. This is what the Trump administration doesn't want anybody paying attention to. Inflation helps the government in many ways. Obviously, it's its silent partner in tax revenue. It can tax the public without taking their money. It just takes the purchasing power away from their money. But it also creates a false sense of affluence because the numbers go up, the numbers get bigger. And so people think they're richer because they own a 50,000 Dow. But in real terms, they're poor. In fact, the whole affordability crisis that both parties seem to acknowledge that there's an affordability problem. They just argue over who's to blame. The Democrats are blaming it on Trump. Trump is blaming it all on Biden. Both parties share the blame for the affordability crisis because inflation has been something that both parties have agreed on. They've both believed in creating inflation. In fact, Donald Trump brags about the big, beautiful bill, which is extremely inflationary. He cut taxes on tips, on overtime, on Social Security. He made interest loans on cars tax deductible. All of this simply replaced taxation with inflation. Consumers are given more money to spend because their taxes are lowered, but government spending goes up. The government spends more, consumers spend more, but nobody produces more. The difference is covered by the Fed. It's inflation. And when you go and you buy products, you pay higher prices because the government got bigger. The reason there's an affordability crisis is because government is so expensive. The cost of all that extra government is built into the price of everything that we buy. So the reason things are expensive is because you're also paying for government when you do your shopping. And so that's what's making everything unaffordable. And that's why it looks like the Dow is going up. All this inflation would have happened even if Trump had won. And of course, that means we would have a Democrat in office right now because the voters would have voted for a Democrat to solve the problems that they would have attributed to a Republican. So Trump is lucky, the Trump administration is lucky that they can keep blaming every problem on Biden. But the problem is they own the economy now because Trump has already claimed that we have the greatest economy in the history of the world and has taken credit for doing that, which means voters will hold him responsible for the problem. I mentioned on, I think, my last podcast, coin was up 10% today, one of its biggest up days. Strategy stock was up 25% in one day. Now, the financial media wants you to believe that this means that, hey, it's a new bull market, everything is great, buy crypto, buy Bitcoin. There's an old saying about bear markets, they slide a slope of hope, right? That's the opposite of the bull market that climbs a wall of worry. During bull markets, the biggest moves tend to be down in single days. That's why we've seen some huge drops in gold and particularly silver prices in recent weeks. These are big drops in a bull market. They're designed to scare you out, to get the weaker longs to throw in the towel and sell their gold and sell their silver. Right? It tests the metal by trying to scare people out, trying to get you to throw away a winning hand. That's why I've been doing a lot of these updates, and I've been on X encouraging people to buy these dips. In fact, yesterday, when I posted on X, silver hit $67, I believe, 67, after having traded 121 a couple of weeks earlier. Now, it was up today. It closed about 77.65, which, is a nice day up, but still way down. But the media is still talking about the silver bubble and how the silver bubble popped, and it was crazy that silver went to 121. Look, it was a bit crazy how quickly it went to 121. But what's even crazier is that it took that many years to get to 121. It should have been there earlier, and it will be there again. It will be there a lot sooner than people think.
The Dow Jones hitting 50,000 is a nominal milestone that masks a deeper economic reality. When priced in gold, the index has effectively lost 75% of its value since 1999. While politicians celebrate these record highs, the affordability crisis gripping the nation is a direct result of government spending replacing taxation with inflation, systematically eroding the dollar's purchasing power. This dynamic creates a false sense of affluence, in which asset prices rise merely because the currency that denominates them is collapsing, leaving the public poorer in real terms despite higher portfolio balances. Meanwhile, recent market volatility has led to a sharp rebound in Bitcoin and crypto stocks, which critics dismiss as a classic bear market rally, sliding down a slope of hope. In contrast, the aggressive sell-offs in precious metals like silver, dropping from $121 to the $60, are viewed as strategic flushes designed to shake weaker hands out of a secular bull market. Despite media narratives labeling silver a popped bubble, fundamental analysis suggests the metal is simply correcting before reclaiming its highs much sooner than the consensus expects. Let's get back to the interview.
We got the ADP jobs report, which came out way below estimates, 22,000 versus 45,000 estimates. I mean, it was a low bar, and we couldn't even clear it. But that was a bad number. That came out earlier in the week. I mentioned that on my podcast on my main podcast. But what came out later than that was the following day, we got the Challenger job cuts report, 108,000 announced layoffs in January. That's the most for any January since January of 2009. Now, in case you don't recall what was going on in January of 2009, we were in the midst of the global financial crisis, which started in the summer of 2008 and basically was at its worst point in January of 2009. So you have to go back to that point to find a January where U.S. employers announced more layoffs than they just announced this January. So Trump is out there saying we got the strongest economy in the history of the world, yet we have more layoffs than we had, or we have to go back to the worst economic downturn since the Great Depression. So that does not jive with this economic strength. And in fact, the JOLTS numbers also came out, and they were a huge miss, one of the biggest misses I've seen. They were looking for 7.245 million job openings, and instead there are just 6.54 million, a big decline. And the prior month's a November number, which was originally reported at 7.15 million, is revised down to 6.9 million. So the labor market is extremely weak as inflation is getting stronger. You know, the one thing that Trump has been hanging his hat on is cheap oil. Well, that's about to change. Oil prices were very strong this week. They've been rising steadily. We're closed, I think, $63.50. We were down about $55 on the lows. So we're moving up, and the oil stocks have been leading the way. The oil stocks continue to make new 52-week highs, leading oil. So I think the oil industry is reflecting that oil has bottomed, and oil is now going to join all the other commodities. I've been talking about that all these commodities are going up. The outlier has been oil, and that's all Trump has been trying to, cherry pick. But of course, when I was listening to Scott Bessent testify, and he was asked, are grocery prices higher than they were when Trump was elected? And of course, they are higher, right? Even the government admits that the prices are higher, and he wouldn't admit it. He kept saying, well, some prices are higher, but other prices are lower. Yeah, so what? You on balance, prices are up. Yes, some prices are down, but some prices are up a lot, right? And so that, offsets the things that are down, but they want to cherry pick and find a few items that may be in your grocery bag that went down in price and ignore all the other items that went up in price. But the fact of the matter is, it's costing you more to do your grocery shopping. And it's about to cost a lot more because the dollar is rolling over. You can clearly see that. It was temporarily, stopped by all the nonsense surrounding the Walsh nomination, Kevin Walsh to be the new Fed chair, and how he was portrayed deliberately by the administration and then the media as some kind of inflation hawk who's going to come in hot and hike rates or something or put an end to quantitative easing. That ain't going to happen, because if he was going to do that, he wouldn't have the job. It's obvious that he's got his marching orders and he is going to follow them. Trump would not have nominated him unless he was confident that he was going to do what is needed to try to make him look good in the midterms. In fact, he's already talking about mailing out these tariff rebate stimmy checks, $2,000 a family. Donald Trump tries to claim that all this inflation is Biden's fault. The problem is, had Trump won and been reelected, it would have been the same. He says that the inflation is because of the deficit spending under Biden. Well, there would have been as much deficit spending under Trump. How do we know that? Well, he was a big deficit spender during his first term. Most of the inflation that we had in the first year and a half under Biden is because of the policies under Trump and the money printed while Trump was president. But what has Trump done so far in his second term? He has taken all the Biden deficits and made them bigger. He has spent more on all the programs that Biden was spending money on. He approved spending more on all those programs. So why should we think that had he been directly reelected, that somehow in that term he would have been for less government spending? He wouldn't have. All this inflation would have happened, even if Trump had won. And of course, that means we would have a Democrat in office right now, because the voters would have voted for a Democrat to solve the problems that they would have attributed to a Republican. So Trump is lucky, the Trump administration is lucky that they can keep blaming every problem on Biden. But the problem is they own the economy now, because Trump has already claimed that we have the greatest economy in the history of the world and has taken credit for doing that, which means voters will hold him responsible for the problem. I mentioned on, I think, my last podcast, you don't win elections in America nowadays by lying to the voters and trying to get them to believe that a weak economy is strong. The way you get elected in America is acknowledging that the economy is weak. And then you lie to the voters by saying that you're going to make it strong. And so the Democrats have got the better message in the midterms and in the generals. Anyway, that's it for this Friday market wrap. Again, I would recommend, as I've been doing on all these Friday market wraps, buy your gold and silver over the weekend. You know, we've had this big correction. We typically have rallies on Mondays.
The administration is currently walking into a political trap by claiming full credit for an economy that is objectively weakening, as evidenced by job cut numbers rivaling those of the 2009 financial crisis, by insisting that financial conditions are historically strong. At the same time, the electorate faces recession-level layoffs and persistent inflation. The leadership ensures they will be held solely responsible for the inevitable downturn. Critics argue that blaming predecessors for rising prices rings hollow when current deficit spending actually exceeds previous levels, effectively guaranteeing that currency debasement continues regardless of who sits in the Oval Office. Political history suggests that voters punish leaders who deny economic reality, leaving the current administration vulnerable as the affordability crisis deepens. For investors, this macroeconomic instability provides a clear roadmap for capital preservation, accumulating tangible assets during periods of market noise. The recent volatility, driven by confusion over Federal Reserve nominations and temporary dollar strength, creates strategic windows to acquire gold and silver before the long-term trend of currency devaluation resumes. Market patterns indicate that these heavy sell-offs are frequently followed by early week rallies, offering a tactical opportunity to enter positions at a discount. As the cheap oil narrative fades and commodity prices turn upward, the fundamental case for holding hard assets becomes the only hedge against a sovereign debt trap. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.